Does this chart look bullish to you? And by bullish, I mean the price action, the structure of this chart. Does it suggest price wants to continue to push higher? Does it suggest that this is a genuine base and a genuine breakout that we're seeing on this chart? Stick in the comments where you think, is this a bullish structure? Does this look like a genuine breakout? Put in the comments why you think it is a genuine and a bullish structure. And on the flip side of this, if you think it's not bullish and doesn't look like a genuine breakout, also stick in the comments why you think that is. My name is Ray Gilmour, and in this video I want to take a look at how charts can lie to us sometimes and what techniques we can use to find when they're lying to us to avoid getting stuck in trades on the wrong side. I did believe this chart looked bullish. Regulars on the live streams will remember back when this occurred back in March that I said this chart did look bullish, and if we go to the weekly we can also see very similar structure. We did have a correction earlier from the previous uptrend, but you can see how buyers come in at the base quite quickly. Just as we drop below the moving averages, we see strong bullish continuation candles reversing a lot of that selling price action we had previously. As we get closer into it, you can see actually as price had reached the end of that initial run to the upside, got it back above the moving averages, you can see that price starts to retrace. But always throughout this process and these candles, we can see sellers don't have any momentum, don't have any force, and that's exactly what you'd expect to see within a corrective structure within a uptrend. When price is pushing to the upside, we get a corrective move back in towards our moving averages, and we expect price to break and continue to push to the upside. So the weekly's looking strong. The daily also, we can see it pushing up nicely in towards the resistance of this trend line. We're making higher highs, higher lows in here as we build this base, and we break strongly out through the highs, through the resistance level, and price looks very bullish. But as I just said, going back to March, regulars on the live streams will remember that I said I did not like this. It looked structurally bullish, but it looked fake. And I actually wanted to sell. After it come back down, I did wait for the next lower high, and I was short. And I say you can go back and look through the recordings of that, how I talked through it in March at the time and what I was actually planning to do. But the reason why I want to talk about this is because it does look bullish. I did think it looked bullish, and say the weekly is, the daily is, the 4 hour is. We looked structurally sound, but there's clearly something wrong in here, and that's what I want to talk about. How a chart that looks really nice, pretty, ticks a lot of boxes, price action, structure, cyclicity, we're breaking levels, then how can it be lying to us? And the only way we can know what's lying to us is by looking underneath the surface. And by that I mean by actually seeing what's happening, the buying and selling activity that's going on within that market. There's very few ways we can actually do that. One of the best ways to do so was by looking at the commitment of traders data. And if we look at the British pound here, we can actually see the full history of all the buying and selling activity that we have within this market. We've got history going back, goes back a long way. We're going to be focusing obviously over in this area. But it's important that we do have the history, because we need to be able to see back in history how the market's performed based on the same conditions that we currently had or had at that point in time. That time where we got the breakout is actually this area here. This is the weekly chart, and we're just seeing that breakout. We are now just moving into May. We've seen that market now move to the downside. But at the point we were getting that breakout, by looking at the positions and the trading activity we have in that market, we could see it was not healthy. It did not support what we were seeing on the chart. Before I explain why, I'll just give you a little bit of an overview of the commitment of traders data. Commitment of traders allows you to see all the buying and selling activity within a given market. The data separates different types of traders. I'll not go into all the detail of it, but essentially what we're looking at here is two main groups. We're looking at traders known as commercials. Commercials, a simple thing to remember is they are not using the market for financial gain directly from the market. They're using it to hedge their underlying business, the exposure their business has. So they're not looking to actually profit from either a price increase or decline. On the other hand, this group at the bottom are traders known as non-commercials. They are speculative traders like you and me as well, looking to actually profit from the direction of the market looking to profit when we buy and go long in the market, and looking to profit whenever we go short and sell that market. And that's a key thing. What you want, obviously, is whenever we do see a breakout, we want to see buying in that market. But we don't want to see too much buying. That might sound contradictory. I want to use an analogy. If you can think of the really simple terms, there's only 100 traders in the world. And if all 100 traders have bought a particular asset, then there's nobody else left to buy. And that is the problem that we had at this point in time. The main problem we had at this point in time in the British pound. Down here, if we actually look, if I go out, so we can get to see the history, this green line shows the amount of long contracts held by the non-commercials, those speculative traders. And if you think when we're at the bottom of this range, think of those 100 traders. Maybe there's only a handful of them, five or 10 of those traders at the bottom that are actually long in this market. Whereas when we get into these peaks and we get to the extremes, the extreme highs, that's whenever all 100 traders have decided to buy. But that problem is, and there's nobody else left to buy, and it becomes a race to the exit door, who can actually get out quickest and first. And that is exactly what happened in here. You can see there's been very few times in history where we've crossed the 100,000 contract mark for the long positions of these non-commercials. And every time you can see we get up into those extremes, they associated with market top 62 areas here, again in that zone. And we got just actually last July, a very, very similar area, similar conditions to what we currently had just back in March. So that is one of the major problems we had. Yes, the structure of the chart looked bullish, and there was buying happening and occurring underneath, but the problem was it was occurring at such a high rate that there was no one left to pass it on, to keep this momentum pushing higher, to take us above that 130 and beyond. There was nobody left to pass the buck on to. On the flip side of it, the commercial traders, those traders who hedge their underlying exposure for their business, what they do is the complete opposite. They look at a market in terms of risk, and they say, where is the biggest risk to me? And do I expect the market to go higher or go lower? And therefore I want to hedge that movement. If they are selling, which they were doing in here, if they're doing large amounts of selling activity within that market, and if I just zoom out, you'll see exactly just how much selling they were doing, pushing up to an area of very, very nearly an all-time high. Again, very similar to what we've seen back here in 2014. If they are doing that much selling, then it's because they see the need, a very, very strong need, to hedge against the next move, which they believe to be to the downside. So we have, again, using that analogy of the 100 traders, all 100 traders who essentially could buy this asset on a speculative basis, have it bought. They are all long. We've got an extreme long position. And the businesses out there that are looking at the risk of a market and the risk to their businesses and viewed this as being the next move being to the downside, they were heavily short in anticipation for that move to the downside. So that, unfortunately, is how a market can lie to us, how a chart can lie to us. The structure here looked very, very sound. The price action, the cyclicity, the lack of selling activity within this area here, particularly very symptomatic of a very healthy correction within an uptrend. We broke strongly. You see the strong price action there on that weekly. Good continuation on the daily. But the problem was the underlying, what was happening underneath the surface was showing that we didn't have buyers left to take this market higher. And commercial traders within this market had a very strong belief this market was actually moving lower, and that's exactly what we did. So unfortunately, charts can lie to us. They can look very structurally sound and perfect in terms of whether being really nice and bullish, but not turning out to be so, having failed breakouts and actually then reversing in the opposite direction. So if you don't have a technique like this in your bag, then I would recommend looking at something like the commitment of traders, allowing you to see what's happening underneath the surface, because there will be many, many times where a chart can tell you one thing, but the underlying and what's really happening underneath will tell you the complete opposite. Hope you found that useful. If you want to find more info and get stuck into commitment of traders data for yourself, by all means jump onto the website and do so. It's updated every week. And interestingly, at the moment, actually, it's suggesting pound is ready to go the other way. But by all means, jump on, dig into the COT data yourself. But the key thing is make sure you understand what's driving that chart, what's driving that market you're trading, and make sure you're not looking at charts that are lying to you.